Okay, let's look at this question here. It says the Federal Housing Administration's role in financing the purchase of real property is to do what? Now, we should probably talk about a couple of vocabulary words that are going to be important for our test. I want to introduce a term called a conventional loan. So, a conventional loan is a loan that does not involve the government. So, typically, when you hear of people saying, hey, you need 20% down to buy a house and you need a 720 credit score, and you really have these heightened requirements to qualify for a home. Typically, folks are talking about conventional loans in that way, loans that do not involve the government. So FHA loans and VA loans and CalVet loans, for that matter, are not conventional loans. Those loans do, in fact, involve the government. So we have two classes of loans. We have conventional loans, which are loans that do not involve the government. And then we have some government-sponsored loans also, like FHA. Now, the important thing to remember about FHA is that FHA doesn't actually make loans. So if you want, as a general rule, FHA does not make loans. FHA simply insures loans. So if you want an FHA loan, since FHA isn't actually making the loan, you're going to want to apply with a regular bank. So if you want an FHA loan, you do not apply with FHA, you apply with a regular bank. FHA simply insures that lender against loss. So this is an important thing to remember, that FHA isn't really there to protect the borrower. They're not really there to protect you. FHA's there to protect the lender. Now, you might say, well, if that's the case, why do I care about FHA? The reason FHA programs are good and valuable to borrowers, even though we're not the ones being covered by the FHA insurance, is because FHA has lower requirements than a conventional loan. For example, FHA doesn't require that like 10 or 20 or whatever larger down payment that conventional loans would require. FHA only requires a 3.5% down payment as a general rule. So the down payment on an FHA loan is much less than on most conventional programs. The credit requirements are also lower on an FHA loan. FHA can take credit with 3.5% down, all the way down to like a 580 credit score. Now, do you think banks are thrilled, excited, and motivated to make loans to people that only have 580 credit and only 3.5% down? No. But lenders are okay to do it. Why? Because FHA is insuring the loan. So FHA, answer choice A, doesn't act as the lender of funds. That's going to be a regular bank. Answer choice B says FHA insures loans made by approved lenders. That one. B's our right answer. That's what FHA does. C says FHA purchases specific trust deeds. No, that is activity in the secondary mortgage market where loans are bought and sold between investors. D says do all the above. No. So the best answer here is going to be answer choice B. FHA's role is to insure loans made by approved lenders. FHA loans protect the lender, but they're good for borrowers because you can get in with a lower down payment and less strict credit. Best answer here, going to be answer choice B.